RV Capital Talks brought to you by Dicor, at the core of everything you do. Hey, welcome to RV Capital Talk. I'm Aidan McCaskey from RVNN TV, introducing the host of the show, Sherman Goldenberg.
Thank you, Andy. We're pleased today to be having on our show Bill Koster from Protective Asset Protection. Bill has driven in from St. Louis for some business in the Elkhart area.
Right.
Welcome.
Thanks.
And as you know, come into the studio here today to talk about Protective and what it does. And curiously, we were grilling Bill before the show, trying to figure out ourselves just what, because it's a big company, it's a global company.
Yes, it is.
But when you boil it all down, we're really talking about in the recreation vehicle field, as well as in your division, auto, marine, and power sports.
Right.
What we're really talking about is something called service agreements.
Correct.
Tell us what you do.
Okay. Well, my responsibility is the entire U.S. and Canada for the RV industry, and a service agreement is really a contract between the retail customer, someone who buys an RV, and us, our company, and it's sold by dealerships throughout the country and in Canada to these customers. The customers pay one premium, and they can buy a service agreement for up to 7 years on new product, up to 5 years on used product. And the service agreement, again, it's a contract. It's not backed by insurance in some cases. In our case, it is. There's an insurance company behind the contract, but the transaction itself is not an insurance transaction. So dealers can sell these at a markup, and usually do. It's a great profit source for the customer, or for the dealership. And the service agreement really has two components. There's the mechanical breakdown component that kicks in after the manufacturer's warranty expires. And then there's the additional benefits components, which kick in immediately. Additional benefits would be roadside service, towing. With our program, we have concierge service, we have RV technical support, we even have a pet benefit for consumers. And the service agreement is generally financed with the purchase of the RV, so it can be financed over a period of 20 years. There is a deductible involved. So when a repair occurs, the customer pays a deductible plus any out-of-pocket non-covered repairs, and then the rest of it is fixed.
Well, in every business, there are competitors. Why would you have a dealer to sell your product as opposed to some other products that he could choose from?
Well, I think, and of course I'm biased, but I think there's a number of reasons. The first reason, and the one I always mention first, is the fact that we're endorsed by RVDA. And we've been exclusively endorsed by RVDA since 1992. And that's important to me, even though you're not an RVDA member, may not be. The fact that the organization has endorsed us for 20 years exclusively says a lot. And not every board member of RVDA sells our program. So it's not a good old boys club and the company that pays in the most money they're going to endorse. They actually go through a due diligence process on us and our competitors frequently, and they have determined that we're the best program. I think secondly is we're one of only two companies in this industry that are vertically integrated. And by that I mean we own the company and we are the insurance company. Most of my competitors, they have an administrator who adjudicates claims, and then they have an insurance company, and they're two different entities. And they all have to work together in order for the program to work. We're all one and the same. And I have one other competitor that does that. The third reason, I would lay our coverage and benefits next to anybody, and I think that we're superior in all areas. And finally, and probably most important, we pay claims. I mean, if you were to call dealers or call RVDA and ask them how many claim problems they've had over the last 20 years, they would be hard-pressed to come up with a few.
It's fair to say that it's becoming an increasingly competitive field.
Oh, very much so. I can remember 20 years ago, I could count the number of service agreement competitors on one hand, and now I could rattle off 12 to 15 competitors right now.
Where this occurs, and one of the reasons where people who aren't dealers and manufacturers don't see this transaction, is this really occurs with your company at the F&I stage of the sale of a rolling stock, correct?
Correct. Yeah, and most service agreements are sold at the time the RV is purchased by the F&I department. Or if a dealership doesn't have an F&I department, they may outsource that function to another company, and that other company would sell the service agreement.
Do all major dealers, do all active, successful dealers offer service agreements?
Yes, they do. Now, I was surprised a few years ago. I did a survey at the Louisville show, and 27% of the dealers I talked to did not sell service agreements, which was shocking to me. I would suspect that many of those dealers who didn't sell are probably not around anymore, because it is a huge profit source for the dealership. Not only on the front end when they sell the service agreement, but on the back end, because us and our competitors usually pay full retail parts markup and labor rates to the dealer. And then if the dealer's on a retro program or a reinsurance program, they can make money on the back end as well.
We live, of course, in the age of an internet consumer, and we'll find out what impact that has on this business in just a moment.
RV Capital Talks brought to you by the Dicor Corporation. Dicor Corporation is 4 specialized companies serving the RV industry. Dicor Products, United Shade, Seal Design, and Vixen Composites. Whether it's RV wheels, walls, shades, seals, or other specialty products, Dicor Corporation is at the core of everything you do.
Bill, just before the break, we were talking about the internet-enabled consumer. How is that changing the business?
Well, it is changing. You know, many people are searching the internet looking for a deal, and looking to buy a service agreement. It's concerning to us because a lot of times it takes the dealer out of the picture. And so the consumer may save a few dollars by not going through the dealership, but when it comes time for a repair, they have to go to a dealership or repair facility to have it done. You also run the issues of how good the quality of the company is you're buying from on the internet. I mean, I don't mind buying a t-shirt or a book on the internet, but to buy a promise on the internet and pay $3,000 or $4,000 for, that's a little risky for me. Then you run into situations where even though this is a contract, it's still heavily regulated, and some states clamp down on where the contract can be sold, what states via the internet. What do you do about sales tax? So there's a whole bunch of issues that consumers should be leery of before they buy.
Do you help dealers to educate consumers on these topics?
We try. We certainly don't want to give legal advice to dealers in certain states, but we try. And of course, our company doesn't sell direct to consumers. We sell through dealerships, and we encourage dealers to use their internet to sell aftermarket products or to work with campgrounds or the local newspapers to sell products. But we won't sell direct through the internet.
I notice on the auto side, I believe and I don't know about the RV side of your business, that you do have, or that Protective has a rather rigorous training program for dealers?
Yes. We do some training on the RV side. Our training is mainly done through our agents. I'm very fortunate to have a quality sales force and agents, many of them who've been with me for over 20 years, that call on dealerships. They have other reasons to be in the dealership. They may be doing the property and casualty insurance for the dealer or offering other aftermarket products. And to a great extent, they use their training resources to train the dealers. I'll go out and do some training at state conventions or at RVDA conventions, but a lot of the training is left up to the agents that we use.
Like most products and services, I assume that service agreement changes over time. Are things changing in the service agreement business in this post-recessionary era? Is there any difference now than it was 5 or 10 years ago?
Oh, very, very much so. I remember the days when we couldn't give away a travel trailer service agreement because the complaint was there's nothing on it to break. And now the RVs have become so complicated. I mean, even slide-ins have slide-outs. And you have plasma TVs and all sorts of components, the leveling jack systems, the slide-out rooms I mentioned. And now we outsell motorhomes 6-to-1, our ratio of service agreements. So that has changed. And of course, as I mentioned before, there are a lot more competitors now than there used to be. We've expanded our additional benefits. Like I said before, we offer pet insurance, pet coverage, refrigerator spoilage. all sorts of added features to our program that didn't exist 5 or 10 years ago.
Pet insurance, quick aside, how does that work?
Well, if let's say you're stranded and you're on vacation, you're traveling with a pet, and you're stranded, and you have to stay in a hotel. Most hotels either won't take a pet, so you'll have to have them boarded, or you have to pay extra to have the pet stay at the hotel. We'll pay for that expense.
Wow, wow. So you know, from here, I think we ask you about this year's business. We're hearing a lot of things about recovery. We hear, and I'm guessing that from your vantage point at Protective, you see the business fluxes. When things go up, you see it in your business.
We do, and it's not always immediate. You know, these contracts have a 7-year tail, and so a lot of times we won't feel the effects of a recession for 5, 6, 7 years. The customer may buy a service agreement today. If that dealer goes out of business 3 years from now, and then the customer wants to cancel their service agreement 4 years from now, we have to step up and pay not only our portion of the pro rata refund to the consumer, but the dealer's portion as well. And a lot of my competitors don't do that, or don't have the financial capability of doing that. So that's, again, another reason why you should do your due diligence and work with a strong service agreement company, because that 7-year tail is a long time to hold your breath.
So, if more or less in closing, if you have a message to the recreation vehicle industry here in May of 2012, what would that be?
Well, I think that it's very important for dealerships to do the due diligence on the service agreement program they do business with. And I'm not necessarily promoting ours, whether you sell our program or somebody else's. I mean, you spend time deciding what manufacturers to do business with and what other vendors to use. Do your homework on the service agreement company, because cheaper is not always better. And we're finding out, and a lot of dealers have found out the hard way, that when it comes time for a claim to be paid, there may not be the resources to pay the claim, and the dealer's on the hook.
So a company that has over 100 years in its background brings a lot to the table.
I think so. I may be a little biased, but I think so.
And one more question, Bill. You know, because I'm looking at my list here. What is Protective doing or planning to do to capitalize on these changes in the industry?
Well, what we're trying to do is to draw more consumers back to the dealership. The average service agreement penetration is only 15%. That means 85% of the people don't buy. And we're trying to develop programs that will enable the dealer to capture those consumers, whether it's a missed point of sale follow-up program from the dealership, or working with campgrounds, working with storage facilities, local newspapers, to draw those people back into the dealership and sell them what we refer to as a post-sale service agreement. I wrote an article a couple years ago for the RV industry, and I estimate conservatively that there are over 5 million consumers out there that don't have a service agreement that would qualify for one. To me, that's the biggest challenge, is to try to capture some of that market, send those customers back to the dealer. Because really what the dealer's doing is transferring the risk that they have, and they're providing a great service to the consumers.
Yeah. Well, Bill, want to thank you for joining us here on RV Capital Talk. Sherman, any final comments?
We do appreciate you joining us.
Okay. Thanks very much. And thanks to you folks for joining us. We'll see you next time on RV Capital Talk.